Welcome to Profit Insights, where we delve into the day's financial happenings with clarity and calm. I'm Dusty, your guide through the tumultuous world of markets and investments. Let's get started. As we step into this week's market movements, Monday, July 7th, 2025, was most certainly a roller coaster in U.S. financial markets. We witnessed a noticeable pullback as trade policy shocks and corporate news unfolded, casting a rather risk-off tone across the board. Major equity benchmarks took a hit, sliding nearly 1% as both cyclical and tech-heavy sectors faced downwards pressure. While bond yields climbed up and the U.S. dollar found some support, volatility was on the rise, albeit modestly. The week began with President Donald Trump's announcement on Truth Social, declaring 25% tariffs on imports from 7 countries, an unexpected move which spooked the markets. As a result, the Dow Jones Industrial Average plunged over 422 points, closing just shy of 44,407. Similarly, the S&P 500 and the Nasdaq Composite tumbled, reflecting a broad market retreat. Adding to the drama, equity analysts have been buzzing. The S&P 500 had recently been exhibiting overbought conditions, mostly closing above its upper Bollinger Band in 7 of the last 8 sessions. So these tariff announcements seem to have been the perfect catalyst for a long-awaited pullback. In the corporate realm, Tesla was in the spotlight as shares plummeted almost 7% upon Elon Musk's announcement of plans to form a new political party. This left investors concerned about possible distractions from Tesla's key operations. Automotive giants like Toyota and Honda witnessed a drop due to tariff fears, and tech stocks, usually the steady stalwarts, weren't immune either. Heavyweights like Apple and Alphabet fell alongside AMD and Nvidia. But not all was doom and gloom. Uber defied the trend, rallying almost 4% to a record high thanks to a boost in its price target by Wells Fargo. Meanwhile, industrial-heavy funds like SPDR S&P Industrial performed rather well amidst the market turmoil. Turning towards bonds and currencies, investors flocked to the safety of government bonds, seeing the 10-year U.S. Treasury yield edge higher. The U.S. dollar showed strength, driven by safe haven flows, which in turn placed pressure on emerging market currencies, particularly those under tariff scrutiny. The Volatility Index, or VIX, ticked up above 17, pointing to increased investor nerves. Even with a rise in volatility, it stayed below crisis levels, hinting at a market sensitive to policy and geopolitical developments. Looking ahead, 2 key factors are set to shape market movements. Firstly, any diplomatic adjustments to the tariff deadlines could sway sentiment significantly. And secondly, with the second quarter earnings season approaching, the focus will be on big names like J.P. Morgan Chase and Goldman Sachs. Their performance could offer a much-needed lift to investor confidence. As we brace for the coming weeks, analysts urge caution. The key might lie in companies with robust pricing power and strong, diversified revenue streams. Staying vigilant on economic indicators like ISM surveys, inflation, and labor market data will be crucial in navigating these choppy waters. That's it for today's exploration of the financial landscape. Remember, in the whirlwind of market madness, stay thoughtful and discerning. When the dust settles, only the truth remains. Until next time, I'm Dusty, wishing you clarity and calm investments.